Hey, this is Jared Krause, host of the Buying Online Businesses podcast. And in this episode, I'm speaking with Goose McGrath from Dash Dots and the Investor Lab podcast. Now, Goose is a property gun. He helps people buy property and invest in properties as well. And what we do in this podcast episode is we talk about what we can learn from investing in property and how similar physical property is to digital property like buying online businesses. We also talk about what it takes to find the right investment, both in a physical property and an online business as well, and how we can set ourselves up to find the right investment to actually achieve our lifestyle goals, our financial goals, and also hit those investments or purchase those investments that are aligned with our guidelines as well. We also talk about creative financing in both buying physical property and also buying a digital property like online businesses. And we discuss how the online business space has more of an opportunity for creative financing versus when we're investing in property. And the reason being is because in property, a lot of people who are trying to get finance with vendors and stuff like that, they're not so open as such as online business owners and actual entrepreneurs are, where we can be more flexible with our creative financing when we're purchasing an online business versus a physical property. Goose and I also discuss relationships within buying any investment such as physical property or digital property, and how important it is to have a team around you of people who know what they're doing in the space and can actually advise you to make the right decisions. And also those relationships with people that you're purchasing your investments from, whether they're brokers, the vendors, the sellers, or whoever it is that you're working with. How important it is to nurture those relationships when you're going to invest in absolutely anything. So this is a very, very powerful podcast episode. I hope you enjoy. Today's episode is brought to you by Investors Club. Investors Club is a marketplace for serious buyers interested in proven businesses that aren't listed anywhere else. There is a free membership where you can get access to 14-day-old listings and can purchase due diligence reports for $47 each. Or if you become a paid member, you can get instant access to every single listing, unlimited due diligence reports, no fee escrow services, access to exclusive offers from Investor Club partners, and priority support. Now, sellers do sign a 2-month exclusivity agreement to only list with Investors Club. There are no purchase fees or commission, meaning the seller nor the buyer ever pay commission in any deal. And every due diligence report provides next level metrics to make sure due diligence is far less time consuming, making it quicker for you to seal the deal. Also, Investors Club have a great Q&A support available both for buyers and sellers. I'm a full member myself personally, and a lot of thought and effort has gone into this service. However, there are a limited amount of seats for this membership, so go and check them out at that URL, investors.club. That is investors.club. Hey everyone, and welcome back to another episode of the Buying Online Businesses podcast. Today we have a different person coming on from a different industry, but with a lot of experience in investing in property. And this is physical property I'm talking about, not digital property, but there's so many similarities. And so I want to welcome you on, Goose. Thanks so much for coming on.
Mate, it's my absolute pleasure, and I think that it's an interesting comparison that even just you made in that short intro there. It's like digital, non-digital. We're still talking about conceptually the same idea. So, thanks for having me.
Yeah, I'm really excited to get into this because when I first started teaching people to buy website businesses or digital property, is the best way to explain to them what it was referring to how you buy a physical property. So you go out, if you're looking to buy one, a lot of people look for brokers. And it's the same, we have website brokers, people go to website brokers, and we look for the business that we want to buy, or we'll look for the property we want to buy. We take a long time usually to find the right one in accordance with our goals, our guidelines, and our financial situation. Yeah. And then we go away and we do our due diligence and all that sort of stuff. And it's pretty that's exactly the same route that you go down with a lot of the people that you work with. I know that you are a buyer's agent, which we don't have in our space yet. Well, we kind of do. We have people who pay to get off-market deals. So it's kind of like buyer's agents, but it's very similar in the process, isn't it?
Well, I guess so. There's definitely a lot of distinctions to be drawn there. And I got to say, I was actually listening to a podcast. I've listened to your podcast plenty of times, and I love it. But it was actually, I think it was maybe a year ago, or even maybe only 6 months ago. I can't remember. But I first heard websites being traded and being referred to as real estate, and I went, oh, that's a very interesting distinction. And it clicked for me suddenly, because I was like, oh my God, they are basically the same. You've just got different, spaces that they operate in, but you've essentially got very kind of similar fundamentals if you think, depending on how you're thinking about it, right? But you've essentially got the fundamentals of cash flow or yield. You got growth, manufactured or otherwise, and then you've got what is the liquidity and the tradability and all of these other kind of things. So I think it's fascinating. You mentioned there's no buyers agents in the space. Do you think that is something that will transpire, that people will start to go, look, I can help you navigate this online world, and I can get to understand where you're at, what you're trying to achieve, what your position is, what the best next steps are, and I can go find you the right deal. Do you think that's potentially going to be an industry?
So it is already in the industry to a certain degree. It's not as refined as, I guess, what it is in property, in my opinion. There are people out there that you can pay, and you pay like a monthly fee, and they'll present a few different listings to you or off-market deals to you. And I don't they go out and they pitch to different websites, businesses that they find, and they're not exactly what the purchaser is after, and it can take some time. So it's really it can take quite some time. So I don't think the process is as refined as what you guys probably have. Another really cool thing that I think that what's happening in property, especially what you're doing after listening to your podcast as well, and going through your book and all the stuff that you do, is you have, like in property, you use AI to find areas and locations and different properties.
Yep.
And I can feel like, obviously we use online, we have Google bots that crawl through different websites and check out the SEO profiles of different businesses and stuff like that. And I feel eventually down the track, we're going to get to a position where we do have AI that helps us find these businesses that are probably off market, and we can go away and pitch to them or start a conversation with them at least. And I think that's just thinking that out aloud. I'm like, maybe I should get onto this.
Well, mate, yeah, that's really interesting, and just talking about AI, I mean, there's huge amount of technological advancements in property. Property is always seen as some kind of like, well, let's be honest, old, stuffy, full of wankers. Like, let's be realistic. I never woke up one day and said, I want to be a real estate professional, because I've got no aspirations to the way that we think about real estate professionals, real estate sales agents and stuff like that. I don't know. I never had an aspiration to be anyone like that. My background is actually in music festivals and events, and touring in punk rock bands and all of this kind of stuff. So the journey that sort of got me to this point has actually been just completely detached from that. But the interesting revolution that's happening in physical real estate is that there's a lot of prop tech coming into the space, a lot. And I'm fascinated by all of the prop tech innovations. And there are so many different ways that you can carve that up. But artificial intelligence and machine learning is starting to play a much bigger role, particularly when you're talking about, developments and all of that kind of stuff, because, and there's consumer level and industrial level of course, of anything, right? So there is consumer level stuff where you can get some feedback and forecasts and ideas and all of that kind of stuff. But then we're actually not doing it now, and I'll explain why. What we actually started to leverage was a research partnership which could actually process around 600 million data points every 12 hours. And it was like nuts, right? Nuts. Which would allow us to kind of get an idea of future growth potential, which was pretty cool. Massively cool. But I'll explain the reason we sort of don't lean into that quite so much anymore. I mean, it was an awesome thing. However, I think that like in the physical real estate space, It's funny that I feel like I need to make that distinction every time I say.
You're on a different type of podcast now.
Yeah, I know, right? It's there are so many external forces that can dictate the market conditions, and I don't know how similar that is to the online space. But so, for example, you can do qualitative and quantitative analysis, and you can do that with both MI and AI of an area, and say that based on this qualitative and quantitative analysis of this data set and these soft and hard metrics, you can reasonably expect X based on historical data reference points of X. However,
you got outside of forces, don't you?
Yeah, totally. Like what happens when you shut the borders to international migration?
Yeah, or even not just in the COVID period. Like what happens if like this big town planning approval doesn't come through, that shopping center doesn't get built or whatnot?
Exactly. I mean, to kind of combat that, I wouldn't be investing in those areas anyway because there are too many moving parts. So you see a lot of people that want to invest, and they sort of invest in these like new estates and stuff where it's like, oh, look at all the stuff that is, we're going to build a shopping center and all this kind of stuff is happening. Now, there are ways that you can draw distinctions between town planning approvals and hedge your bets a little bit, but I think the safest bet is to always look for already established areas that already have all of the stuff, but maybe look for the other value propositions. Then you get less buffeted by unkept promises. But nonetheless, change of local government, change of state government, change of federal government, change of tax policy, change of migration policy, change of education policy. Any of these kind of things can really shift. Even the bet, you can, as I say, you can hedge it off soft and hard metrics. But we've actually started to basically say, well, how can you succeed if you just can't rely on that? Because it's all well and good to go, look, the computer says we're going to do this in the next 6 to 12 months, But,
yeah, it's so true. Like there's so many variables. And I think the key word that you said was change. And I'd like to relate that to the online space because it's basically exactly the same, but like looking at a bit of a mirror with pointing back at you as digital property is, and I don't know if you know much about this space, but what happened in our space recently is a big change happened to some websites. So for example, people can make money from affiliate websites where they publish content and they have affiliate links and get commissions on sales. And they had done that with a specific program called Amazon Associates. So they're using Amazon affiliate links. Amazon came out with this keyword that you mentioned before, a big, massive change in their policy. And they were paying out like 8% commissions and then brought them all the way down to 3% commissions. So even one of my clients had previously bought a business and he was hit by that and, lost 62% of his income in one change like that. So there are these external things or variables or changes in algorithms and changes in company businesses and policies that we need to really consider as a part of our due diligence to be, I guess the right word might be like completely wholesome.
Yeah, exactly. And to be honest, the whole reason that I'm even here having this conversation about offline real estate is because when I say we, me and my partner, we went out and made a mistake. Basically made the same mistake that literally tens of millions of Australians make all the time. We didn't know what we were doing. We thought we did, blah, blah, blah. Didn't do the research. But we bought the wrong property in the wrong place at the wrong time. That's the simplest way of putting it. Because and that kind of started us to go, okay. I mean, that's cool because it was a catalyst, but how can you strategize how to create, how could you buy a property that you would still be able to control it no matter what happens if there was changes to an algorithm or if there was changes to public policy or, a major factory shuts down, or how can you buy something where you can go, okay, everything stacks up right now, but even if I am 100% wrong on one of those factors, how can I still succeed? Or even if something changes in the future, how can I still succeed? And I think that's really underpinned the core philosophies out of everything we do, and that's what that's the thing that drives me, because I'm like, it's easy. Anyone can go buy real estate. Anyone can go buy property. Anyone, like you could go buy it right now. Like there's not, just go for it. Go for it. I'm not here to sell property. Just go buy
Slap
it.
some money on black.
Yeah, just get stuck into it. And like you've got the whole perspective that over an infinite timeline, you get 100%. Well, not even infinite, but over a certain timeline, you have 100% success rate in real estate in Australia. Statistically, if you hold it long enough, it should be right.
Yeah, that's the massive difference between property, physical property, and digital property. Is that digital property you need to maintain. If you're just going to leave it there, then there's going to be more competition that are going to buy up that digital real estate and take control of that space. And that's a very different dynamic. And this is why I love property. And we've spoken, I'm getting more into property now myself. And, you know, it's great place to put your wealth that is kind of like a bank. And, you know, you can get started for passive income and all that sort of stuff. It's a great place to get started without too much experience or too much heavy lifting. Whereas with the digital property is you should learn at least a bit about the space, and if not, have an operator put in place.
There's kind of like a big distinction there. One of them's let me just rephrase this actually. I consider property investing to be a business venture. I don't believe it to be a bank. I think honestly, I think if you're like, oh, property is just a bank, I'll just kind of chuck my money there and, you know, it should be right. I think that your thinking is probably incorrect, and you're probably going to be one of the 90% who never get past 2 properties. It's that simple, right? It's that simple. You need to be a little bit more strategic about that. You need to think about it like a business. One of the things I always talk about is, you know, every real estate asset you buy, there's 2 components. There's the land and then there's the building, right? That's the big distinction. There's land and then building. Different combinations of how all that works depending on the property type. Now, the building that is on top, that is your business. And you are in the business of selling accommodation solutions. Okay, that's it. That's really the best way to think about it. So then you got to think about, okay, well, what types of clients do I want? How do I want to attract them? How do I want to keep them? What happens if I don't take care of them? What happens if I don't provide any maintenance to my property? Guess what? Your income is going to go down. You know, like there's going to be an intrinsic underlying value there typically from the land component, but it's the same. It's the same thing. So you got to think, okay, what do I want to own a business that doesn't make any money, i.e., negative gearing? No. Like, would you want one like that?
I'm glad you said that.
Yeah,
and I guess the operator is kind of like the property manager as well, that you pay a certain cut out of. And I'm glad that you rephrased what I said, because I phrased it being a bank completely wrong. When I'm looking at it, and as I've spoken to you, is like in the background, I'm certainly treating it as a business. I'm just not just going to go, hey, I'm not going to learn anything about this and just put some money here, because I could have made the fatal mistake that you and your partner made in the first purchase, right?
Yeah, exactly.
So talk to me, how long does it, like, people come to me and they want to buy a website business. People come to you, they want to buy a property. Now, there's different timeframes depending on people's finances and also their work ethic in my space anyway. I know that you're a buyer's agent, so you go away and help, but you've still got to wait for people to come back to you with forms and all that sort of stuff. So how long roughly does it take somebody to find a property that is pretty much the right one for them?
Okay, so in order to answer that, I want to just take a little step back and just explain some kind of conceptual ideologies that I think will be really beneficial to anyone, whether they actually have a property now or whether they're thinking about getting in property. Actually, I'm going to come back to that. Let's just take a little step back, because when you're talking about why would you buy one? Like, why would you buy a property over buying a website, for example? And you've got to go why would anyone, like, before you even go, is it even the right one? Like, why would you even want to do that? Now, as I understand it, you know, websites and digital assets are probably going to be much better for cash flow, as I understand it. Probably much better for yield.
Correct.
But they take a little bit more work, a little bit more expertise,
a little bit more risk.
A little bit more risk. You know, there's risks associated with it. Now, you can align that risk profile and also the cash flow return you can align that with a business venture, right? So typically the kind of people who are going to be buying online businesses are going to be entrepreneurs anyway, in some degree, right? They're going to have that. They're either going to be early
Those
stage
traits.
Yeah, early stage, middle stage, late stage entrepreneurs, and they're seeing that as a business opportunity. Now, as someone who has been in business for most of my life, I know that business is extremely volatile, but it can be very rewarding. But much like, and there's risks associated with it, and there's a lot of work, and you can't just leave it. It's not like a baby you can put in the corner and walk away from, right? The same with online businesses. Now, so then you go, okay, well, why would I want to invest in property anyway? Now, for the types of people that we work with, we don't typically work with the type of people who are just like, oh, look, I just want to park my money and I'll just buy 2 properties and catch you later. The type of people that we work with are typically entrepreneurial. They're the kind of people who are like, okay, for whatever reason they've decided that they want to venture into that pathway. For some people, it's just because it's the only pathway they know, and maybe they haven't learned about online businesses yet. But for some people, it's entrepreneurs and stuff who have a business and or maybe an online business or an offline business. They're like, it's great, but I need something that has a little bit more, that I have more control over, that is a little bit more of a long-term actualization. Now, then to draw that, so then you kind of go, okay, cool. So I've decided for whatever reason I want to diversify. Now, if you this is really what it is. It's about diversifying an asset class. I'm the last person that's going to sit here and say, real estate is the truth, the right, and the way, and all you ever need to do is invest in real estate. You can absolutely achieve financial freedom and everything that you want in life by investing in real estate, but it's not the only way, is it?
It's the same with any venture you go down. Like, people come to me and say, hey, I would like to start an online business, or I'd like to buy one. I'm like, you can do anyway. I don't advocate starting. A lot of people know why, but you can still do it. And the same with property. It's, different horses for different courses.
Yeah, absolutely. So let's keep walking on this path though, because let's say, okay, for whatever reason, the individual has decided that they want to invest in the asset class, the vehicle that is real estate, because that's all it is. It's not, as I say, it's not the be all and end all. It's just a vehicle. It just happens to be an area that I specialize in. Now, then it's like, okay, well, where are you? Where are you financially, emotionally, intellectually, all of this kind of stuff?
What are your goals?
What are your goals? What are you trying to achieve? Over what time frame? What's your risk profile? All of that kind of stuff. Now, there are 3 distinct phases in any property journey, I believe. And those distinct phases are what we call the foundation level, which is the basics. So we'll touch on them. Then you got acceleration level, which is kind of the middle tier, which is things are getting a little bit more complex, a little bit more cash involved, longer timelines, much better returns. And then you've got legacy phase, which is all about freedom, replace your income. That's it. You're good. You're done. Once you start getting there, you're pretty much there. Now, the reason that there's 3 phases, because everyone goes, well, why can't I just jump to the legacy phase? And why can't I just go and start, buying unit blocks and it's like,
I just want to do $10 million development over here. You can't
do
that
yeah,
off the bat.
I know, right? And it's like, well, if you tried to do that too soon when you didn't have the EQ, FQ, and IQ to do that, then you would break, and you'd probably end up going bankrupt. Like, it just would not go well. So if you sort of take a little step back, and what you asked was, how long does it take to get people started, right? It really depends on what your starting point is. But if we took a position that somebody was going to buy their first real estate investment, okay, that would most likely be a foundation level. And even if someone comes to me and they go, well, look, I've got $1 million cash, but I've never invested in property before, I'd still be saying you're going to be starting at the bottom. And the reason for that is they might have the financial IQ, but they might not have, they haven't built up the requisite muscles. They don't understand the process. They don't
know the space that well.
They don't know the space, and I'm a big advocate that you got to slow down to speed up. Like, there's no get rich quick schemes here.
Hugely. I just want to put a little thing in there as well. We'll keep going on this journey, but I've got people that come to me and they have all this cash as well, up to $1 million, and like, hey, should I spend $1 million on my first business? And to me, I'm just like, hell no, nothing. Like, maybe buy something for like 50 to 100K, learn that for a year, and then sell it and then go bigger, like, flip it like you would property. But I'm glad that you mentioned that, because it's a huge thing for any investment. And I don't think it's just like digital property or physical property, but any investment that you come into with that amount of cash. I mean, if you've got 100 million and you can throw $1 million down, then okay.
Yeah, awesome. Yeah, sweet.
Yeah.
But it's like you're risking 10% or whatever.
Exactly.
1% or whatever.
Different risk profile. Yeah.
Exactly. But that's not usually the case. I haven't yet had anyone say I've got $100 million and I've never invested in real estate before, but I'll let you know if that happens.
But please do. I'd like to meet that person. I've got some questions for them.
Mate, they must have come from the online business space to have that kind of return. So,
no doubt.
Now, okay, so let's just say it's your first time getting started. Yes, define your goals. Yes, understand where you want to go, why you want to go, all of that kind of stuff. Now, how long does it take to get into a property? Well, it really depends. If someone wants to come and work with us, for example, and they say, "Look, Goose, can you do it for me? This is where I'm at," and they've got, let's just say $75,000 cash and a stable income, and so they can borrow, and they meet all the kind of basic prerequisites. Then that time frame from like, "Hi, how are you?" to like, "Here is your first property," would be about 4 to 6 weeks. So it's not that long.
That's cool.
Yeah. Now the point from like, "Here's your property" to like, "Now you own it," because there's a split there, is probably about another 4 weeks. So typically about a 30-day settlement. So from go to woe, sort of about 60 days, and you can own a property. Now, you could do that heaps quicker. You could do it heaps quicker. But again, you might be doing it wrong. Like if you just went like, what do you mean? Well, why would it take that long? I can go buy a house right now. You can literally jump on realestate.com.au and buy. That's it. But the reason it takes a little bit, say 4 to 6 weeks, is actually because there's a lot of complexities to it. There's a lot of nuances to actually work out. Is it a good purchase, or is it just cheap? Or is it like, what is the risk profile of the property, and what are the public housing percentage? And there's so many nuances and due diligence that you've got to do. Much just the same in the online space.
I think you'd be silly to go away and buy something in such a short time frame, not just because, hey, I've got the cash and I can do it, but because much like you, I'm sure you're very the same as me, Goose, is that I'm very macro and long-term goal orientated. Yep. And that person who is going to buy that at a quicker rate is robbing themselves, I believe, of an education in all these little nuances of like, sign this form, I need to check this, and building and pest and all this sort of stuff. It's the same within my space as well. Like, you need to check all the SEO profile, the digital marketing, the traffic, all these little things. And I mean, a lot of people come to me and they can, and I know that you're big on education. You're huge on education, which is why I love you over so many other brokers. It's like, give me cash, I'll go away and do this. And I'm the same, because I'm about feed a man or teach a man to fish rather than give the man a fish for one evening to have dinner. And I think that's a lot of people try and leapfrog steps, and they may get to a certain position, like where they get to a position where they're going to buy a $10 million business or a $10 million development, and they haven't learnt these little things that are really critical along the way. And all of that work up until that $10 million investment sends them further back than when they even were when they first started with yourself or myself. And I think that's a huge thing for people to understand.
Yeah, massively. I think there's one big thing that slows people down with property, which is a good thing, is that it's so friggin' expensive. Let's say you've got $75,000. You're not going to buy a $75,000 house. You're probably going to go buy a $350,000 or $400,000 house. All of a sudden, those numbers are a lot bigger, and people go, geez, what if I get it wrong? That's a $300,000 or $400,000 mistake, not a $75,000 mistake. So that order of magnitude changes people's perception, which can be good and bad, because sometimes it makes people too scared to take action. That's bad if it makes them too scared to take action. But you know what I mean? It helps slow down the process.
Oh, yeah, it definitely slows down the process. You've got finances as well that slow it down. You've got cooling off periods and a lot of these things that help protect the investor. And I don't feel that, we've got a little bit of finances, or, people can finance businesses. There's not that much financing options, which does slow people down. But I mean, honestly, if I'm going to be serious, and a lot of people that listen to this podcast know this, is that one of the brokers, they've sold $75,000 businesses in seconds, like literally seconds. So people with big cash, they just see this site come up and they go, I'm going to buy it. They don't even have time to do their due diligence. So, I mean, I think that's a silly decision unless you are buying something and you can see the value in it before you even do due diligence anyway.
Yeah. And I actually do have clients who are cashed up, who interestingly, business owners and entrepreneurs, like people who have built successful businesses over the last 10 years, and they're now like, all right, I've reached a financial platform where I just want to go. I just want to go. Part of my job is actually telling them to slow down. Like, it's easy to go and buy. Like, one of our clients right now, he's just on a mission to see how many properties he can buy in the next 5 years. And I'm actually saying to him, I'm like, dude, you've got to slow down. You need to just stop. Like, let me look at every single one. Let me just check it. And he's like, but I want to buy more and more and more. And I'm like, you're going to buy the wrong ones. And I had to had to scare him a little bit. Like, he sent me a few properties. I was like, dude, this one's going to lose you money every year for the next 10 years. Do you really want that? He went, I was like, cool, just chill. Just relax, do the work. Now, you mentioned, I am massive on education. I didn't wake up one day and said my life's mission is to be a buyer's agent and go shopping for properties for people. Like, that
give you the fulfillment that you need.
No, not at all. I mean, if I could cast myself forward 5 years, it would to not even really for this to be a service that we can offer to help people, but it's not the main function of what we do. I want to help people move from where they are now to where they want to be, and I think the best way to do that is to empower people. Which is why I love conversations like this, because you need to just crack open the can a little bit and go, guys, it's actually like, once you can understand it, it's a really great thing that you can do. Again, it's not the be all and end all. Like, I'm invested in my own business and I'm invested in different ways in other stuff. But it's a great vehicle if you know how to use it. If you know what you can do with it, then it's awesomely powerful.
Yeah, it is awesomely powerful. I want to talk about financing and structuring of deals, and like, in the online space, we have a similar thing. You guys have vendor financing. We call it seller financing. We have earnouts. We, have different tiered pricings and seller notes where the vendor might carry the property for a little bit and stuff like that. Yeah, what can we learn from the property space? Because the property space has been around for so much longer than the online business space, and has had a lot more, I would say, experience in creative financing for properties.
Yeah. But I would actually say, like, it's been around for ages. It's one of the most dusty, mothballed industries in the world. Like,
and is that because of the banks, though?
That's a great question. Is that because of the banks?
Or the bigger lenders that dictate a lot of what gets loaned out and how that's structured?
No, I wouldn't necessarily say it's because of the banks, because I think, like anything, if you know how to use it, like, the banks aren't a barrier. I think it's got to do with the institutionalized psychology around the asset class
of understanding.
Yeah.
Different options. I mean, because I've learned so much. I was going to go down the route of doing put and call options with different properties, and just explaining that not just to a vendor but even to a real estate agent is very, very complex. And for people who understand what a put and call option is, it's like where you can put $1 down on a property for a certain amount of time frame, do your due diligence or do whatever you want. You kind of own the property depending on the put and call option, and then you can purchase it at a different date. That doesn't exist in the online business space, but I love that you said the psychology of where people are at in our space or in the property space.
I would actually say that there's probably more creativity, more ambitiousness, more flexibility, more understanding, more opportunity to get creative in the online space and in many other spaces. Now, within the property space, yes, you can do vendor finance, you can do no money down deals, you can do put and call options, you can do all kinds of stuff. But I would say that in my experience, I know people who have had huge amounts of success with put and call options, but I also know, like, several orders of magnitude more people who just have not had failure, but just not found, like, just not being able to do it because of finding vendors who want to sell, and you're like, hang on, what? You're gonna give me like $1,000, but then you're gonna control my property for like 2 years. What? And so what you actually tend to find is that options typically work at a certain level. Options typically work when you're at a large developer level. So if you go to someone's farm, right, and you say,
it's a business though as well.
Totally. Hey, I noticed that you've got 100 acres and you can see over there, that's the edge of the city and it's coming this way. What I'd love to do is I'd love to buy you, let's say the farm's worth $5 million, right? And you say, look, I would love to buy your farm for $6 million. And the farmer goes, what? It's only worth 5. And you go, yeah. I want to give you 6. But here's the thing. I'm only going to give you $1,000 now and I'll give you all of the rest of it in 4 years' time, once I've done the DAs and done the approvals and started marketing the properties and selling it, and you can cash it up that way. It's awesome. And we actually went on a little adventure down that rabbit hole. Me and my partner Gabby, we were sending like 500 letters to Greenacre sites. Like everywhere. It was a fun adventure. We didn't get anywhere with it, but I think if you were to just like let's relate this back, and I guess there's a lot of different ways you can do it, but I think for the most people that are listening to this, it's going to be a little bit more clear cut.
Yeah, I think that's mainly because the person who's selling a property, they have different goals and motivations and understanding about property and what they want to do with that money. And I think somebody that's selling a business they're just looking for more opportunity in the space or more opportunity to invest elsewhere or make more money. So I feel that they're probably more open to the idea of creative ways that you could do financing structures or even joint venture partnerships with them moving out. Like, for example, I've had somebody who's joined my community who went to buy a business and said, hey, Jared, what if I just bought half a business? I ran it and I, gave 50% or kept 50% of the business to the previous owner, and he just mentored me and taught me what to do. And that was an awesome idea for both parties because they both won out of that deal. And it was a good route to take. And I think it's just that more people are more open. And I guess we're lucky it's more entrepreneurial in the online business space.
Yeah, totally. And it's a different value proposition as well. It's a different value proposition and it's like, okay, how can we work on this together? And somebody has seemingly probably built up their business from the ground up when they're going to do a joint venture. Someone comes in, hey, can I buy half of it and whatever? And they go, yeah, I'll teach you how to do the other half. Most people who buy real estate in Australia don't buy a piece of dirt, work out how to title it, and then understand how to put the headworks in, and then they just don't. They just go buy something. Now, and the reality is 98% of property, 99% of property investors, homeowners or whatever are going to be using a mainstream finance facility. They're not going to be using private capital firms. They're not going to be using vendor finance structures. There is a segment of the community, and I'm connected with that whole segment, which does creative finance deals. And it's really cool to see what happens there. It's a lot of time and commitment, and it's really niche. Yeah. 99% of people are going to be using mainstream finance. There's first tier, second tier, and third tier lenders, and you're going to be using one of them, right? And it's actually not as hard as people think. A lot of people think that finance is the hard bit. It's actually really not. It's quite simple. Now, I can't give financial advice. I'm not qualified to do that. I'm not a mortgage broker. I'm not an accountant. I'm not a financial planner. I'm not any of those things, right? So just take this as opinion or at least just maybe some a way to stimulate some ideas. But nonetheless, here's the thing. A lot of people get stuck and they never get past 2 properties. The reason they never get past 2 properties and never really achieve anything really that good out of it is because they don't understand how to structure or what types of assets they need to buy. Okay, so it's really simple. If you can buy an asset which produces a net positive income, and then if you can get the right finance on that asset, you're going to be able to continue to get more finance because the banks won't perceive it as a risk. Your serviceability won't go down and all of that kind of stuff. And this is where a lot of people make mistakes. They don't understand the functionality of what the banks want versus what you want and how to join those two worlds together.
Yeah. So it's just really important to, if you're going to go away and get finance brokers, you work with finance brokers and stuff like that, and you just get that advice from them. Obviously, you know a lot about that, but it's not legal advice that you're giving. I do want to talk about something that's so important I feel in property, but also very, very important in the online business space. And I reiterate this to all of my listeners and everybody that's joined my community, is that you shouldn't just be getting into this space just to buy one business and, do whatever you can, burn bridges to get there and just make it all about you. The most valuable thing that I feel out of the experience or the journey of buying either your first business or your first property, or building a portfolio of either investment, is building those relationships within that space. Because I feel that even just from one good relationship can come an opportunity or an off-market deal or a joint venture, or they could give you really good advice. How important is that, relationships in property?
Well, show me someone who's gone on a property adventure on their own, and I'll show you someone who's failed. Like, it's really that simple.
Exactly.
You need to build a team. I can sit here and talk to you. I could talk to you all day. We could talk for the next 8 hours just about property. I know it. I love it. I'm skilled at it. It's all good. But I don't operate in a silo either. Like I have my power team. I have advisors that I talk to. I have people in different segments of the whole industry that I talk to and get advice, and I pressure test. I'm like, oh, hang on. What about this idea that I haven't yet thought of, haven't yet discovered, and all of a sudden it's here? All of that kind of stuff. Now, for someone who's getting started, actually, like, it doesn't matter whether they're getting started or not. Like, it doesn't matter who you are. I don't care. Anyone who wants to invest in real estate, you got to make sure you got the right team and the right relationships. That might be a mortgage broker. Now, depending on where you're buying, you'll need a conveyancer. But if you're buying in multiple states like we do, you might need multiple conveyancers who can do the legal work specific to that state. So you got finance, you got legal. You may need a really good property specific accountant, because typically business accountants have no idea about property and they don't know how to factor it into your overarching wealth strategy. And they typically can make an absolute meal of it. So you need someone who's pretty familiar with property and understands that kind of stuff. You may want to look at getting structures set up and everything like that. So you've got all these kind of different members. Obviously, a buyer's agent is a really good aspect. If you're focused on a very specific area, for example, if you're like, I only want to buy a property in, I don't know, the eastern suburbs of Melbourne, for example, you might want to make a really good point of going and getting to know all of the selling agents, taking them coffee, doing all of that kind of stuff, because you may find that you're going to build a good enough relationship to get an opportunity. That's a way deeper level of connectivity than most people want, because they just don't want to. They don't want to spend their time taking coffee to real estate agents, hoping that they might get a deal one day. Because I don't.
I think it's, if you're going to focus on a certain area, I think it's valuable to do so. So last year I went all in on looking for property and small little reno flips and stuff like that. And in different areas that I was going to focus on, is I made a list of agents and I called them once a week and I built relationships with them. Yep. And just by doing that, they knew what I wanted. And when a deal came up, they came to me and they called me. And it's the same when you're buying a website business. Is I believe you should go to all of the brokers, tell them what you want, see who fits with you very well, speak to them, build a bit of a relationship with them, tell them what your goals are, what your guidelines are. And this is stuff that I teach in my community. But once they know you and they know what business you're looking at, then it's actually beneficial for you, for them to come to you and say, hey, this is what you're after. And you build a great relationship for long term, but also it makes your life easier. And I just think people just forget about that whole process.
100%. And that's actually a major part of the benefit that I've got, is because I'm talking to real estate agents all the time. Like at any given point in time, we've got, could be over a dozen properties that we're buying at any given point in time. So to be able to have those conversations and relationships with real estate agents where they're like, all right, what are you looking for now, Goose? Like, and it's like, great, we want something like this, like this, like this. It doesn't excuse the due diligence component, but it does give you that opportunity. I would put a caveat on that though and say, because a lot of people talk to me about like, off market. Oh, it's going to be off market. In my experience to date, 95% of all of the off market deals I have ever been shown and ever seen have not stacked up financially or stacked up on due diligence. So I think that I think it just gets a little, like, people get hungry because they want something exclusive. They want that, it's that scarcity thing. I'm not sure if you've read Influence, Psychology of Persuasion by Robert Cialdini.
Robert.
Yeah, amazing book. I'm actually reading it now. But, it's that scarcity thing. It's like, oh, it's exclusive for me. And people get so hungry for it because there's a trigger, there's an emotional trigger in your mind that's like, I've got to get it before anybody else does. It's this whole kind of thing.
And they feel like they're going to get a better deal because it's not on the market. There's no brokerage fees and all this garbage stuff. Whereas in the online business space, Goose, the same thing happens where people look at off-market deals and they may pitch to buy a business for somebody, but they're not ready to sell their business. So most people don't have their books in order. Most people don't know what information they need to provide for due diligence. And brokers actually get all that. They package it up and they give it to you. And it's the same with brokers in the property, is that they're ready to sell. And it's just easier.
Yeah, totally. And I think where you get a leading edge advantage is by being able to see the signs of what's coming. It's the same in the online space. Like if you can see a trend changing, then you can kind of see it in the future to some degree. And you can go, okay, cool. I noticed, bad example maybe, but I noticed that e-commerce businesses, like more people are starting to buy online, and I might want to invest in e-commerce business because I can see a future in that industry and whatever, right? That's where you get the leading edge advantage. It's not by trying to just put your blinkers on and go, well, I got no idea what people want. I just want to get one off market. One of the big advantages that we bring to the space is because we are so focused on understanding, both soft and hard data, that we can actually kind of see a little bit into the future. Now, you can't predict the future. And as I always say, he who lives by the crystal ball is destined to eat ground glass. Now, we can't predict the future, but you can kind of see the signs, right? You can kind of see the signs. If you've got areas, people are talking about, oh, the property market's crashing right now. There's all this kind of noise and negativity. Oh, rents are dropping and property market's crashing and Now, I'm in Sydney right now, okay? And I can tell you right now that there's no way that I would buy in Sydney. None. Zero. You couldn't give me, if I got the money for free, maybe, right? But vacancy rates are on their way up. That's a bad sign, right? But now, vacancy rates, I'm in Bondi. Vacancy rates in Bondi are thinking about 7% right now. To give that some context, 3% is considered to be equilibrium, where there's roughly enough rentals for the amount of people who want them and all of that kind of stuff. And it's a balanced market. Anything above 3% and it's a renter's market. In the Sydney CBD, that's gone up to 13.8%. Okay, we're talking pretty horrific numbers. So when people are like, if you look at a certain subset of the Australian economy and Australian marketplace, yes, some markets are not that good right now. And that's fine. And that's fine. However, we're investing in markets where the vacancy rate is 0.1%. 0.1. Not 1, 0.1.
Wow.
And so when you can find the right opportunities, and that's not the only metric that you look at, of course, but when you can find the right places that have got the right fundamentals that you can see a little bit into the future and go, okay, I can understand the economic mechanisms driving this forward with fail safes and with other other components of the due diligence, then it makes it much easier to just be able to go, well, I don't need to read the newspapers. I don't need to care what everybody else thinks. I can invest correctly. And it's simple. Yeah.
You don't have to buy based on the emotions of the market. And that's a huge thing in the online business space as well, is that if you see businesses that are doing really well selling personal protective equipment right now through an e-commerce website business, then you're not going to be too worried about how that business is going to perform over the next few months and the micro and the emotions that are getting thrown around there. You know it's going to be a good investment for the next few months, and maybe you could buy it, grow it, and then flip it once this economical situation or pandemic is over. So I think Can I sorry to interject there, but that kind of sounds pretty risky to me, right? So that kind of sounds like buying in a mining town to me, right? So we can draw that distinction there. If you were to see an online business that was for sale, I know we're selling hand sanitizer, face mask, and it's like, oh my God, look, we're selling so much. How good is this? And you were to buy that business with with an indeterminate amount of time, because you don't know when that demand is going to drop off. Like that could be... Correct. Correct. It could be very, very dangerous. And it's not something that I would personally do. But say, for example, people were living in or were in China, they could see this was going to be a worldwide thing, and there was a business for sale in America and it hadn't really hit so bad, then it could be a good investment for the time period. So you're certainly right. Like, it's the same with mining, is if you knew that there was a mine that was going to open up and you bought there and you knew you were going to hold it for maybe 2 years and the life of the mine might be 10 years, it could be a good investment. But
honestly, I'd challenge your perspective on that. And the reason being that I've seen so many people fail at that kind of thing, because I don't believe that any human being has the ability to be able to time the market.
Yeah, I agree on long term. I'm only buying investments, especially when I'm going to come to you and buy property.
Yeah.
It's going to be 10 years minimum, 15 years. We've already talked about this anyway.
Yeah.
And it's same with my conundrum with a lot of people that get into investing in websites for the short term is that when you flip and you try, and even if you're not trying to time the market, when you flip and you buy something for 6 months, you can build it up, grow it, and make some good money. But I think a lot of people forget about the cost involved with selling it, the time involved with selling it, the also having to sell it with a team and then having to rebuild another team for another business you buy. All of that compounded, if you're to do that for 10 years and you do 2 business every 6 months, that's 20 businesses, and you're trying to, 20 times commissions, 20 times team, 20 times time of trying to sell it. I think any short-term investment is not a good. And that's my personal opinion. That's my philosophy. But each their own.
Mate, I wholeheartedly agree. Like, I don't believe in flipping as a strategy, not because it doesn't work. Loads of people make money out of flipping.
Yeah.
But just because the risk profile is too high. Like I've got a very high tolerance for risk on a personal level. But I have got such a low tolerance for risk on a property level. Like, it just doesn't make sense to me. Like, I could go find an opportunity right now that is high yielding and great value and everything like that in Port Augusta, like in a mining town. But the thing is, if you look at the underlying economic fundamentals, it's like, well, yeah, it's got a $7 billion injection of capital right now because based on the industries. But in 2 years, it's going to basically be cut off like that. And so I like to think, okay, how can you build an all-weather portfolio? How can you build a portfolio of assets which are going to deliver you the cash flow and the equity and the liquidity and the opportunity in a way that you theoretically never need to sell, ever need to sell. Now, the only reason you would sell, and sometimes selling is a part of every portfolio strategy, the only time you would sell is if you reach a ceiling of your debt capability. Because most people can't buy properties outright. So you're always going to have a debt capability, and that's going to be limited by usually the risk profile of the lenders. So based on how much equity and growth you've either been able to capture, manufacture, or otherwise that you've got in the property, what your equity position is, and what your serviceability position is. So how much free cash flow have you supplemented your income with, et cetera? Has anything changed in your working situation? So the only time you would liquidate an asset is if it was going to hold you back from achieving whatever the next stage in your strategic plan is, in which case it may have taken you, the old phrase that, what gets you out of Egypt won't take you to the promised land, can be very true in property as well. You may need some properties to get you to a certain point, and then you go, look, they're not serving me anymore. Move them on. But ultimately, it's about your debt capacity that's going to be the only thing that slows you down.
I think that's the same with online business. Instead of debt capacity, it could be debt capacity as well, but a combination of skill capacity, because there is some skill involved with running online business. For example, if you bought a business for $100K, you build it up to $3 million, and you don't know how to take it to the next level. You don't even know how to hire somebody or an operator to take it to the next level. It might be time to either sell that or just remove yourself from the business completely and hire somebody, a recruiter to hire somebody that's good for the business. So, Goose, what a chat. So good to have you on. Seriously. So many like very, very similar things happening in physical property and digital property. And I look forward to more of these chats. Where can people find out more about you and what you're doing?
Well, firstly, thanks for having me on. It's been a great conversation, and I really hope that it's brought value to your audience. I think there are a lot of distinctions to be made. And if I could just one quick point is, my passion is about empowering Australia's real estate entrepreneurs, and I believe that the people who have the mindset to be able to approach real estate not as a mothballed, dusty old industry, but as an opportunity to apply their entrepreneurial spirit, I think they're the people that are going to have the greatest levels of success, and they're the people that I'm most passionate about serving, and that's what my mission is. Now, if people do want to find out more, just head to the investorlab.com.au. I mean, our buyers agency is called Buyers Agents. You can access that from the investorlab.com.au. We got a podcast and all that kind of stuff there. There's loads of different ways that you can extract information, skills, and knowledge out of our ecosystem for free. We just really want to help people. But if you do need a bit more hands-on help, there's an opportunity to book in a call there as well. So, yeah, just head there.
Awesome. Thanks so much, Goose. I'll be chucking links below, everybody. Everybody that has listened, please let me know what you thought about the show. Go away, subscribe, leave a review, and let us know what you liked about this, because I love feedback. And the more feedback you give me, the better I can make the show. So thanks so much for listening, guys. Thanks again, Goose, and I'll speak to you all soon.